One of the biggest hurdles that entrepreneurs face is securing the funding that they need to grow their business. Traditional financing options like business loans or credit cards can be difficult to access, especially if your credit isn't in the best shape. The Revenued Business Card solves that problem by offering a funding solution that focuses on your business revenue instead of your credit score. If you're a small business owner who's struggled with credit in the past, or if you're just starting out and don't yet have a solid credit history, then this card could be a real game changer for you. In this review, we'll dive deep into how the Revenued Business Card works, what you can expect when using it, its pros and cons, and whether it might be the right fit for your business. If you're ready to find a funding option that doesn't rely on your credit score, then keep watching. What is Revenued Business Card? At its core, the Revenued Business Card is a tool designed to help small businesses access funds quickly without the need for a strong personal credit score. Instead of basing approvals on your personal credit history, Revenued looks at your business's revenue to determine your eligibility. Now, this is a huge advantage for entrepreneurs who might have had trouble securing traditional financing because of their personal credit situation. When you apply for the Revenued Business Card, you won't be asked about your credit score. Instead, the process revolves around your business's financials, how much revenue you're bringing in, your cash flow, and your bank account activity. If your business is doing well financially, you could be approved for funding that will help with anything from buying equipment to covering expenses during slower periods. The key difference between the Revenued Business Card and a traditional business credit card is that it functions more like a merchant cash advance, where the repayment is tied to your future sales revenue. So instead of worrying about monthly payments, you repay based on the percentage of sales you make. This makes it a more flexible option for businesses that need to tie repayments to their cash flow. How the Revenued Business Card works. Let's break down the mechanics of the Revenued Business Card and FlexLine. It's a bit different from what you might expect from a traditional credit card. Here's how it works. When you're approved for the card, you're essentially given a line of credit that you can use to make purchases for your business. But here's the twist. Instead of a fixed credit limit based on your credit score, the amount of funding that you're eligible for is tied to your business's monthly revenue. The better your sales numbers, the higher your credit limit will be. This also means that your credit limit isn't static. It grows and shrinks based on how well your business is doing. If sales are up, your credit line increases. If your business hits a rough patch, your available credit may decrease accordingly. This is a pretty unique feature that traditional business cards don't offer. For example, let's say you've been using the Revenued card for 6 months, and your business is bringing in $20,000 a month in revenue. As your revenue continues to grow, your spending limit might grow with it, giving you more flexibility to make larger purchases or investments in your business. The idea is that as your business becomes more successful, your access to capital should grow in parallel. The FlexLine feature allows you to draw cash from your card's credit limit, essentially turning the card into a source of liquidity when you need it. This is incredibly helpful for business owners who need quick access to capital to cover expenses like inventory, payroll, or other operational costs. You can use the card for everyday business expenses. Just swipe it like a regular credit card. But instead of carrying a balance, you're essentially borrowing against your future sales. Factor rates, how the costs add up. Now, one of the key things to understand about the Revenued Business Card is that it doesn't use traditional interest rates like a typical business credit card. Instead, it uses a factor rates, which is a multiplier that determines how much you'll end up paying on top of the money you borrow. Factor rates are different from APRs in that they don't have a monthly interest charge. Instead, the amount you owe is based on the factor rate. For instance, if you borrow $5,000 with a factor rate of 1.2, you'll end up paying back $6,000. This is the total amount, the $5,000 for the borrowed funds, plus the $1,000 fee determined by the factor rate. Factor rates are often presented as a decimal ranging from 1.1 to 1.5, so you can expect to pay anywhere from 10 to 50% more than what you borrow. While factor rates can seem straightforward, they can be quite costly, especially for businesses that need to borrow a lot over a short period of time. It's also important to note that unlike with traditional business credit cards, there's no grace period to avoid the finance charges. So even if you pay off your balance early, you'll still need to pay the factor rate on your funds that you've used. Now, this is a big difference from credit cards where you can avoid interest charges if you pay the balance in full each month. Qualifications. Is your business eligible? The Revenue Business Card is designed for businesses that may not qualify for traditional credit cards or loans, especially those with less than ideal personal credit. But while personal credit scores are not a factor, there are some business requirements that you need to meet to qualify for the card. First, your business needs to have at least $10,000 in monthly sales. This is one of the key criteria because Revenue wants to ensure that your business is generating enough revenue to support the repayment of the funds you borrow. Second, your business must have been around for at least 6 months. This shows that your business is established and has a track record of consistent revenue. Third, your business needs to have a separate business bank account. Now, this is standard requirement for most business funding products because it allows the lender to verify your sales history and cash flow. Additionally, Revenue will use your business bank account to collect payments directly from your sales revenue. It's also important to note that if you're in a particularly slow revenue period, the card's spending limit and repayment schedule may be adjusted accordingly. So if your sales dip below a certain threshold, your access to funding could decrease. Taking a look at the pros and cons. So the pros of the Revenue Business Card. So far we've covered how the Revenue Business Card works and the key qualifications, but what are the actual benefits of using this card for your business? It's accessible to more businesses. One of the biggest advantages is that the Revenue Business Card is available to businesses with fair or damaged credit. Since the approval process focuses on business revenue rather than personal credit, even business owners with poor credit histories can access much needed funding. Quick funding. So if your business needs capital quickly, the Revenue Business Card is an excellent option. You can get it approved in as little as 1 hour and have access to funds within 24 hours. This makes it a great choice for businesses that need immediate financing for unexpected expenses or opportunities. No hard credit check. Another huge benefit is that there's no hard credit check when you apply for the Revenue Business Card. This means your personal credit score won't be affected by your application, which is particularly beneficial for those with already low credit scores. Flexible repayment terms. So unlike traditional loans, the Revenue Business Card's repayment terms are based on your sales revenue, making it much easier for businesses to manage payments. You pay based on your actual cash flow. So if your sales are strong, you can pay down the loan faster. If sales dip, the repayment amount adjusts accordingly. On to some of the cons of the Revenue Business Card. While the Revenue Business Card offers some incredible benefits, it's not without its drawbacks. So let's take a closer look at some of the downsides to keep in mind before applying. Factor rates can be expensive. As mentioned earlier, the factor rates for the Revenue Business Card can range from 1.1 to 1.5, which means you'll end up paying a significant premium for the funds you borrow. In some cases, this could make the card much more expensive than a traditional business credit card or loan, especially if you have to carry a balance for an extended period of time. No grace period. Unlike with traditional credit cards, there's no grace period to avoid finance charges. With a typical business credit card, if you pay off the balance before the due date, you won't pay interest. But with the Revenue Business Card, the factor rate applies as soon as you borrow, and you can't avoid paying it by paying earlier. High revenue requirements. In order to qualify for the Revenue Business Card, your business must bring in at least $10,000 in monthly revenue. This might not be an issue for more established businesses, but for smaller businesses or startups, this requirement could be a barrier to entry. No way to build personal credit. While the Revenue Business Card reports to Dun & Bradstreet, which is a major business credit bureau, it does not report to 3 personal credit bureaus: Experian, Equifax, and TransUnion. This means you won't be able to build personal credit by using the Revenue Card, which could be a downside for those hoping to improve their credit scores while accessing business funding. How to apply. If you think the Revenue Business Card is a good fit for your business, then applying is straightforward. Just complete the online application. Click the link down below in the description to fill out the application form with some basic information about your business. You'll need to share details like your sales revenue and business history. Connect to your business bank account. To verify your sales history, you'll need to link your business bank account through Plaid, which is a secure third-party service. This is used to assess your eligibility for the card. Review terms and activate. your account. Once you're approved, you'll get a dedicated account manager to guide you through the process. You'll review the terms, including the factor rate and credit limit, before activating your account and using the card. So the Revenued Business Card is a great option for small business owners with fair or limited credit. It provides an easy and flexible way to access funding based on your business's revenue rather than relying on your personal credit score. While it offers quick funding and has a simple application process, it's important to be mindful of the costs involved, particularly the factor rates. If you're a business owner who needs fast access to capital and has steady revenue, then the Revenued Business Card could be a solid option. However, for businesses with strong credit histories or those who can qualify for traditional financing with lower interest rates, this card might not be the most cost-effective choice. Ultimately, the Revenued Business Card is a valuable tool for the right business, one that has reliable revenue but may not qualify for traditional loans or credit cards. With flexible terms and fast funding, it can help take your business to the next level. Now, if you want to get started with the Revenued card, you'll find links for it down in the description below. This is an affiliate link, which means that we earn a small commission when you use it at no extra cost to you. And these commissions really help support the channel and allow us to continue creating free content just like this. So if you end up using it, we thank you so much in advance. Now, if you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you never miss another video. Here on this channel, we make videos dedicated to helping new and existing entrepreneurs get started and succeed in business, so be sure to subscribe. Other than that, thank you for watching. We'll see you here in the next video.